Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 23rd of April. All right, just looking where we finished off yesterday's trading in North America. Equity markets slightly lower, and it was a overall, you can't see at the moment because the page is updated, but a risk-off day. Okay, equities lower. The impact of the treasuries seems to really be nullified at the moment. So risk-off would be selling the dollar block and buying US dollars. Now, it wasn't a huge move by any stretch, but it's enough to, just to get things moving. You got this, and it's challenging because we don't have a clear direction on the dollar just at the moment. You can see the dollar index is trading sideways. It's just traded up through that previous week sort of resistance line, excuse me, coming up to the secondary one at 91.40. It's just slowly climbing, right? And the market is now, it's like we're in a bit of a transition of, we're moving away from the treasury bonds as being the main driver. And the Bank of Canada's decision in their statement to bring forward the potential chance of rate hikes to 2022, 2 years earlier than expected, is really gearing up commentary around next week's Fed meeting, okay, and other central banks. So, but what we're seeing at the moment, a bit of dollar strength, the euro just trading down through this rising upwards trend line. Now, we've got this sort of key pivot point around 119.94. It's come back and tested that again. If anything, to be safe, I'm thinking getting short under 119.90 makes a lot more comfortable sense. But you know what? The last 3 or 4 times euro has dropped here, it's been a bit of a slow burner through a support line, comes back and retests, and then slowly gets going. So I don't know if that's going to be the same case, but that's where we're at. Now with sterling, it's been a big week for sterling as far as data goes. We had that big move up. Now it's sort of just drifting as the euphoria around the vaccines and their so-called expanding economic growth as they turn everything on. The lights there are sort of a little bit dimmer. That story fades. It only has a sort of short-term lifespan. So that's sort of drifting lower, and Aussie and Kiwi continue to sort of dabble with the downside, but really tough price action, right? It's very hard to sort of look at it and go, you know what, I'm really into this, because they keep sort of coming back, drifting sideways. If anything, we've got the start of some resistance trend lines here. You probably want to be keeping an eye on those as well. But it's overall, what I'm trying to say is this move is not convincing, not yet anyway, right? I'd love to see euro break down here. That might be enough to get these other pairs moving lower and the dollar starting to move higher. Now, when it comes down to where is the activity going to come from, well, if you have a look through the macroeconomic data, we've got a bunch of PMI information here out of Germany and the Eurozone. That's obviously going to be very important for euro. If we get weakness there, it's almost a bit more of a confidence thing with regards getting short euro. And if the numbers are strong, well, if you are short, you might be a good reason to square up. And then it flips over, right? Then we flip straight back over here to sterling retail sales figures. Keep an eye on what's happening there. I can't see any sort of real big connection with the macros with sterling yet, but just keep an eye on it. You never know when these things are really going to come into play. And there's some manufacturing PMI numbers and housing numbers to finish the week in the US. So that's where we are. It's one of those situations where we've had trend lines building. In particular, if I just come back to the charts, in particular, euro. I like the setup here. It's got numerous touches. The good thing about this is everyone's going to be able to see it, right? It's happening. We are starting to break down. There's a little not as much confidence in the moment in the Asian session. Stochastics are a little bit overbought. I'm thinking we're going to see this thing drift lower. That's where the German and Eurozone numbers come in. If we get weakness there, traders will be confident to jump in. Outside of that, you know what? There's not a huge amount going on. If you check the overall global bonds, Aussie and Kiwi prices are down, which means the yields are higher. And that's probably why the Aussie and Kiwi are a little bit higher in the Asian session today. The rest of them are pretty neutral just at the moment. And that's pretty much it, guys. There's not much more to sort of drill. Like, you can't get blood out of a stone. You got to wait for the market to give you the opportunities. Next week's Fed meeting is going to be huge, especially on the back of the Bank of Canada. They could start signaling things are improving much better than they expected, and we could see the dollar go for a huge run. That would be my dream boat situation. Outside of that, as I said, keep an eye on the data. Euro is still top of the pops, the best opportunity. Good luck. All the very best. Cheerio.